Hello and welcome. My name is Thorsten Tiet. I'm the founder of Dividend Stocks Cash, Stock Screener to make long-term profit growth visible to help you benefit from growing capital gains and dividends as well. We analyze Microsoft this time because contrary to what you might think, it's not about purely dividend stocks or stocks with high dividends. Dividend Stocks Cash also covers tech stocks, for example, even stocks not paying dividends yet, like Facebook. But this time we are going to talk about Microsoft. Microsoft is up more than 30% this year. You can see it here in TradingView.com. Right now, even 43% within 1 year. And it's extraordinary, even compared to other stocks like Facebook, for example, which also surged here because they reported very nice earnings in the same evening. And hide for now. Apple, for example, and it even outperformed Amazon within 1 year. And you can also see that not only did Microsoft outperform all these high competitors, which are also very successful, but Microsoft stock or the price is less volatile than the stock of these benchmarks. And this means that on the one hand, we have a less volatile stock. On the other hand, the stock has even more capital gains than the other ones. So from this point of view, Microsoft seems to be really an exceptional stock. And from a fundamental perspective, it is also an exceptional stock in two sides or in two ways. First, it's an exceptional stock if you look at the different segments which provide revenues and operating income. Here we see that Microsoft is divided in 4 segments and 3 operational segments and 1 segment which is more or less a container for restructuring costs. But good news, there are no restructuring costs anymore. They occurred starting in 2015 when after the Balmer area was over. This is 10 billion write-off related to Windows Phone mostly. And then we see here deferrals, mostly from deferral from a Windows 10 operating system when Microsoft changed the acknowledgement of revenues, and they did not report everything or everything sold immediately as revenue but when they started deferring it. But what I want to say, which is the most important, is if we look at the different segments, we see that all 3 segments which are operational are highly profitable. That's the operating income, that's the revenue. We have a nice distribution of revenue between the segments. Just to give you an idea about the segments, we have the segments production and the business processes, where, for example, the famous office suite like Excel, you see Excel here, is located. Then with Intelligent Cloud, you might think or might be aware that Azure is part of it, but also, for example, SQL Server or Windows Server, where Dividend Stocks Cash is running on. It uses both, and more personal computing. So if you have at home Windows, then you contribute to these revenues using the operating system. And here you see the growth. That's 2018 business year, which ended in June. And here you see the growth so far for each segment. And here you see that each segment is growing. And Intelligent Cloud takes the lead with plus 22% in revenues. That's the revenue growth. So that's all good news. Where's the bad news? The bad news is related to the current stock price. Take a look at the dividend yield, for example, which is here. It's the dividend turbo here. It creates, or this tool creates buy and sell signals. It helps dividend investors to determine if the stock currently is a buy or is maybe a sell if you intend not to make buy and hold, but if you also sell your dividend stocks, for example. For Microsoft, you see the dividend yield starting from 2003 when Microsoft started paying dividends, and you see that the dividend yield of Microsoft even exceeded 3% in 2012, for example, during the Balmer area, and was above 2.5% for a very long time. And currently we have a dividend yield of 1.4% only. We need to go back till 2008, prior to the financial crisis, to find similar low dividend yields. So the dividend yield is very low right now, although the dividends, the absolute dividends, nicely increased in 2008. They were $43 within 12 months paid, and now not $43, 43 cents, sorry. And now it's 1.76 or $79 even. So the dividend about quadrupled, multiplied by 4 about, and still much lower or as low as in 2008. This gives us an idea about the immense capital gains the stock made within the last years. We have already seen it on the chart, and we can see it even in more detail here in the screen area. Probably Microsoft will even be the stock exceeding $1 trillion market capitalization. If we go into the full chart analysis, then we see even more interesting things about Microsoft. First, we see here, this might be interesting, that Microsoft wasn't a very good investment for a long time at the beginning of the millennium. So you see that you got capital losses for the most time from 2001 to 2010. So Microsoft wasn't really a stock to make you happy, with the exception of 2007 and a little bit also in 2004. But starting in 2011, the stock turned to become a winner each year. And in 2018, business year 2018, the stock even made capital gains of 43%, and in 2017 of 34%, before of 15%. And now in the running business year, we already have more than or about 20%. No, sorry, that was in the last year. It was 20%. And right now we have 32%. So it became a winner, Microsoft, for a very long time already, since 2011, each year, nice capital gains. What's now nice to know is the valuation, because undisputable Microsoft is a high quality stock, but paying each price for quality, that's the question, or how high is the current price. So that's a dividend yield, we don't need it. But these two charts give us an idea about the current valuation, or overvaluation even. First, let's look at the price earnings. And here we see that currently we have a price earnings of more than 30. And regarding the operating cash flow, we have multiples of 22. I already updated the data here, so the earnings per share is $4.31. That's already the data which should be the actual or current. And we see here that in the business years before, the price earnings was much lower. Now it's 30, before it was 22, then it was even below 20 and still below 20. We need to go back a long time to find a high valuation like this, and let's do it. The last time the stock had a price earnings above 30 was in 2004, when the price earnings was 36 or about 36. So in all these years, the price earnings was lower. In 2015, the price earnings was already 30, but that's not representative, because if you take a look here at the earnings, this is the reported earnings. Then we have this write-off. Maybe you remember the Excel sheet write-off of about 10 billion related to Windows Phone. By the way, some of these earnings data is adjusted, for example, here, because the US Tax Cuts and Jobs Act did hit many stocks, and it was necessary to make adjustments in this case. You can still see it here because the net margin is much lower here and here also, as usual, and you see here that there were some extraordinary items. Okay, but let's go back to the valuation. So we see that currently Microsoft trades at a PE of about 30, even above 30, and we needed to go back till 2004 to find a higher price earnings ratio. So we need to go back 14 years. And regarding the operating cash flow 22, and here it's probably the same 22. It's in 2000. No, 2002. We even need to go back a little bit more far, 16 years to find a valuation as high as it is currently. This gives us already an idea that we have very high multiples today, and the multiples decline more or less. They decline, yes, because or thanks to growing profits, but they are still very well above the averages of the last years. And if we look at the fair values, which are calculated using these multiples, then we see here that we are well above the current value, or we have a very clear overvaluation. We have fair values between 70 and 80 US dollar currently. And of course, fair values will increase, but they stay well below the current stock price till 21. So that's a very long period. And this makes me ask if the stock right now is a buy, or if you should maybe better wait for the stock price to come back a little. That's my opinion. I wouldn't recommend to buy the stock right now. I would wait maybe for the whole stock market to come back a little bit, and then to get the stock if you want it, maybe 10 to 15% cheaper. Because yes, quality comes at a price, but we don't need to pay every price. Anyway, I wish you good luck either with Microsoft or any other stock for your investments. This is Thorsten from Dividend Stocks Cash. Thanks for watching. Bye bye.